Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Friday, April 14th, 2023. It's now the 13th. We start off in the S&P 500 daily chart in DeMark, looking back to end of December 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential sell setup 3 count. And to negate that for end of day on the 14th, there must be a close below 4109.11 for the price flip to the buy setup count 1. The supply line here became qualified, and this ad hoc supply line that I drew on here became qualified today. However, price came within about a point or so of qualifying this buy TDST level, but did not make it above it to close end of day on the 13th, so that's still disqualified, and it's in no danger of becoming qualified anytime soon. The only levels in danger of becoming qualified would be this ongoing demand line, which for today is at 4067.20. So a close under that level and that demand line becomes qualified. Keep going, get under this trend factor, disqualified down 1, and that becomes qualified. And this ongoing supply line for the 14th is at 4192.21. So price would have to open above that supply line and close above that supply line to qualify that supply line. If it opens before the supply line and subsequently closes above the supply line, that supply line becomes disqualified. And right above this buy TDST level, which is still resistance until it becomes qualified and or confirmed, is this 50% qualified and confirmed propulsion exhaustion up. So tag that level, and there's quite possibly a better chance of moving more to the upside and going after that ongoing supply line. And price in the aftermarket hours for the S&P 500 at 8:28 p.m. on the 13th is 41.46. And the NASDAQ 100 NDXHILO's 5 EMA is getting ever closer to going under the 10 EMA. It looks like the index itself, and dotted right here, is still continuing its sideways action here. So the ROC 12 is at 7.14. It still has a chance to get to 0 plus or minus 5 and have that coincide with the blue going under the red. And the NDXHILO short-term KST made it below 0. It's at negative 21.79. And the intermediate term KST is still pointed up and to the right. And the KST long-term is pointed up somewhat too. So those two are countering this short-term move here. That's why this sideways action on the dotted line. The NASDAQ composite high-low and a high-low here has the 5 EMA above the 10 EMA in red, but the 10 EMA has fallen below the 21 EMA. 10 EMA in red is at 2760. And the 21 EMA in gold is at 27.78. So it's somewhat backtracked a little bit there. And the ROC 12 is starting to roll over. Short-term KST is still above zero, but has a pronounced rollover to the downside. Intermediate term KST pointed straight up, and the long-term KST is still in a downwards trajectory. So again, the intermediate term and long term has the high-low index in check. The New York high-low index chart still looks really good. The 5 EMA blue, 10 EMA red, 21 EMA in gold are forming that nice rainbow pattern here. Blue above the red, red above the gold here. So this is looking pretty good still. Looks like the index itself in dotted took a sideways right turn there. So it's stalling a little bit. And the ROC 12 has a pronounced rollover to the downside, somewhat like the NASDAQ composite. And the KSTs look like the NASDAQ composites, the short term rolling over below its signal line well above zero. Intermediate term pointed straight up above zero. And the long term is still in a downward trajectory, so the intermediate term and long term have the NYA in check. The S&P 500 support and resistance big board chart shows the gray areas at the disqualified by TDST and the pivot point. Price in the pre-market hours for the S&P 500 at 5:38 a.m. on the 14th is 41.38. To the immediate downside is S1 and the cloud conversion line for the daily chart. And to the upside is R1, the daily 50% propulsion exhaustion up at 41.61. And we can't forget the top of the range at 4163.72. And since S&P price has been moving up these past several weeks, I have given a new range above it, so a dual range. Here's this top of the super bullish wedge from 510.21, and right in that same area is a horizontal support at the same time, so it's more of a range within a range of these two, about 10 points. And to the bottom is a range above the original range at 3723.34, and that's at 3800.16. The ROC 1 jumped out of its green zone and went above its positive volatility line, which is at 1.33, and the ATR2 is right up against its volatility line at 48.31 and pointed up. So 50 is the volatility line there. And the PPO extreme improved immensely from where it's been before, living under -0. It's at 3.56% above zero. And the next stop is this PPO level 4 at 4.50% above zero. And then another big gap after that to the PPO level 3, 8.43% above zero. And the New York traditional McClellan breath oscillator to get back to zero would take 2,959 decliners over advancers to get back to zero. Have a great day.